Hello and welcome to our webinar today on selling into the US, a really important market with everything that's going on in the world or has been going on over the last couple of years. Obviously, we've had Brexit, then we've had a pandemic. Now we've got Russia invading Ukraine, which is creating havoc across supply chains and costs. And we've also got consumers having constrained spending power in the UK. Wages aren't rising as fast as costs. Costs are going through the roof. So I think a lot of retailers, like yourselves watching today, are going to be interested in exploring new markets to expand into. And the US is a natural market for UK retailers, because they largely speak the same language, have the same sort of wants, needs and desires as UK consumers, obviously with a few differences. I still don't walk on the pavement in the US because that's the middle of the road. They call a pavement a sidewalk. But apart from differences like that, it's a relatively easy territory to sell in. But having said that, there are some complexities when it comes to retailing on the taxation side. So I'm thrilled today to invite Benjamin from Avalara to join us, who's going to be talking us through some of those complexities and basically how can you simplify them and manage your business to grow successfully in the US without falling foul of any of their rules and regulations. So welcome, Benjamin. Tell us, first of all, a little bit about yourself. Who are you? What do you do on a day-to-day basis?
Thank you, Chris. It's great to be here to talk about this topic because I'm very passionate about. So my job at Avalara is to help companies understand what their tax obligations are when selling into the US, and then support them in any of the requirements and the automation solutions that we have. So I tend to work with customers of all types of businesses and different industries and different sizes, using different methods to sell. And my background, more generally speaking, is in automation in different industries. So I spent a lot of time in cyber and marketing and e-commerce before that. So I'm all about how can you use software and how can you use third parties like Avalara to expand your business and grow without worrying about creating burdensome tasks for your own internal teams, or using third-party services on a manual basis that will cost a lot of money. So yeah, that's me, and we've got quite a few slides today. It's not aiming to bore anybody, but I'd just like to call out things visually to talk to people about exactly what it is we're highlighting when selling into the US.
Well, let's get started. Do you want to set the scene on selling into the US and tell us what we should be expecting?
Yeah, sure. So I've gone through the introduction already, so I'll skip past the pretty picture of myself. So here's what we'll be talking about. First of all, I'm going to give a quick overview of the US market. As you explained, Chris, it's a really exciting opportunity, especially for British businesses who don't need to worry about things like translation and product concerns when entering the market. And it's a massive consumer market. I'll talk about what sales tax actually is and try to clarify what the tax obligations might be for businesses selling in the United States. We'll talk about marketplace laws, which is inherently valuable for anybody selling on marketplaces, especially using things like fulfillment by Amazon, and how these marketplace laws might affect them. We'll talk about the steps. We've got 5 key steps that we like to sort of break down for businesses to understand to achieve sales tax compliance, and then of course how Avalara can help throughout those steps, and ending on some ongoing considerations, because of course automation is great, but it's not magic. There are still things that you need to do, need to keep track of, especially if you are planning on growing your business and being successful. So we can help just explain what those ongoing considerations might be.
Fantastic. So US marketplace overview, obviously a lot's changed over the last couple of years, but what's happening out there? What's the opportunity for merchants?
Sure. So I'll go on to the next slide and just show the scale of the market and talk a little bit about that. So firstly, the e-commerce market, of course, in the United States is massive. It's showing no signs of decline at all. Grew 14%. It accounts 15% of total retail in the United States. That represents a whopping $870 billion. And in fact, $1 of every 5 was spent in that sector in retail comes from the digital space. And it's no surprise to anybody that's selling in retail that COVID has added even more volume than expected to the size of that market. Now, incredibly, on your point about marketplaces and Amazon, 60% of online sales in the retail space were made on Amazon alone. Marketplaces like Etsy, eBay have seen tremendous growth as well. The benefits that we're going to go into, a little bit later as well, of selling in a marketplace is, of course, that they simplify efforts in terms of marketing and advertising and reaching the correct audiences. There's a huge captive market already there for you to tap into for your certain products or goods that you are selling. It removes a lot of the hassle logistically if you're using FBA, because you can send your goods directly to FBA's receiving center, and they'll just help you reach all of your customers on their marketplace within their expedited time frame, next day delivery, etc. So really good opportunity. However, as I'll talk about, there may be tax obligations that you need to think about. So they don't disappear if you're selling on a marketplace.
I think it's an absolute amazing stat, isn't it? 60% of online retail sales on Amazon alone. I mean, we all know Amazon is a giant, but that is just a staggering number. The market penetration they've got in the US.
Yeah, it is. It's an American company, the concept of, marketplaces was born over in the United States. So, where we've seen adoption of marketplaces, in Europe, and, of course, a lot of the more niche marketplaces and specialist marketplaces we've seen. I'm not going to mention any specific names here, but we've seen some very, very interesting niche marketplaces be able to leverage this popularity of Amazon, because people they know that they can trust Amazon. They know that their goods are going to be delivered really quickly. They know that they can use search functions to find really good brands on there, and of course there are customer reviews as well. So inherently, it's very trusted. It's very easy to get what you want via Amazon. So it's a really popular way of shopping in the US.
So you mentioned the sort of sales tax complications. What's the first thing we should be thinking about when we're thinking of putting stock into Amazon FBA?
Sure. So sales tax, first of all, to define what it is an indirect tax. So in a way, by nature, very much like VAT or GST or consumption tax if you're selling in Japan. However, it's levied on the sale of any goods, but only to the end buyer, so on that final transaction. So it doesn't apply to all of the other parts of the supply chain, only that final one. That means that it will apply to any sales made not just to consumers, but also to other businesses and to governments, which is what's quite unique about it. If you are selling to a business or a government, it might be for resale purposes. It might be exempt, but exempt transactions is a whole nother topic that I'm going to talk about a little bit later. The key thing is that it's the seller that is responsible for compliance. That means that the seller needs to understand what their obligations are. They need to, make sure that they are calculating. They need to make sure they're collecting, obviously, the correct taxes and then remitting those taxes to the authority and reporting to the authority. I'm going to go through a few more slides here just to show exactly how complicated it is. This is a map at a very high level of the taxing jurisdictions in the United States. There are over 12,000 tax jurisdictions. So each of these little different colored boxes represents an autonomous jurisdiction which has got its right to levy taxes at its own rates and its own rules within the United States. So when it comes to looking at how much I need to charge, whether my products or services are exempt or not, what the status of my tax obligations might be in a state, this is the sort of thing that you need to start looking at. So it gets very complicated very quickly. If you look at
I'm kind of liking Montana, which seems to be the only state that's got a single tax jurisdiction.
So interestingly, Montana doesn't have any sales taxes. There are some states which don't have sales tax at a state level, including Montana, which is why that was just one block. However, those states can still have local jurisdictions which can add taxes. So the example being Alaska, where you might have tax obligations in the city that you're selling into, but at the state level, there's no concept of sales tax. By and large, there are 46 states plus Puerto Rico that do have sales tax laws. So those are the ones, the vast majority, of course, that you need to be looking into. And I'm just showing here the differences that can occur on the jurisdictional level. You've got two addresses. These are two homes that are next to each other. 7,450 Leyden Street, 7,452 Leyden Street. You can see that one of them has got a 9.25 sales tax rate. The other one's got a 4.75% sales tax rate. So guess what? Even postcodes and postal addresses don't correspond to taxing jurisdictions. And this was why, things like the Marketplace Facilitator Act were very easily adopted by states and by marketplaces, because roughly speaking, it's easier just to use automation and software just to enable tax calculation and tax effectiveness across the board. You asked about the first thing that you need to consider. So I wanted to show how complicated it is in terms of looking at the taxing jurisdictions in the United States. I always say that the first thing to consider is Nexus. Now, Nexus is the connection between a company and the tax authority. Okay, so the way you might use it in language is you have Nexus in New York, means that you have an obligation in New York to register with the state, collect taxes, and file tax returns to the state of New York. So the first one that we look at is physical nexus. So physical nexus is any physical link with that state. So some examples that I'm putting down here, having any offices, having your own warehouse, employees, even data servers or data centers. If you own that storage space, if you own those servers that are on that rack, then that can trigger nexus. Point number 2 here, storing inventory in a third-party warehouse triggers Nexus in almost every state. Now, the key consideration, of course, if you're selling on Amazon is if you're using FBA, which is, of course, the way to do it the vast majority of the time, then you need to watch out for those inventory movements, because and you have no control, of course, when you're sending your inventory out to Amazon FBA, you have no control over which FBA warehouses they're going to ship to. And there are 38 states in the US where there are Amazon warehouses. So immediately by using Amazon FBA, you might have a tax obligation in up to 38 states.
That's pretty complicated, especially for smaller sellers starting out. So can you kind of touch on what sort of size seller is going to be ready to use Amazon FBA? You don't want to sell $100 worth of stuff and have to fill out 38 tax returns, obviously. But in financial terms, on sort of turnover, what sort of US turnover should you be kind of aiming for to make it cost effective to actually deal with these minimum 38 tax authorities? Maybe I think you said sort of thousands of tax authorities.
Yeah, sure. So, I think no Amazon seller that I've ever spoke to is going to, put a minimum on it, because they need to test the market. Okay. So there are a few things to consider. You have to have been doing business in the state for a certain amount of time for the state to actually enforce any type of penalty or any fines. This is all generally speaking. I can't tell you if if a state is going to audit you after you've been selling on Amazon after 5 days. It's quite unlikely, but the real answer to that question is the US don't really want legislation to ever stop a company doing business. So they do have grace periods, like I just mentioned, or certain delays and timeframes that you can take advantage of when selling. So it's not that there's a minimum volume that you'd expect to look at. Of course, I think I would say if you're only expecting to make a couple of $100 in sales in a market, you probably wouldn't activate a new market in Amazon and go through the whole hassle of figuring out your inventory being sent over there and setting up the store, etc. So the answer is you should probably test the market and see how it works out, and then again, because these things are based on inventory volumes, you can use things like the inventory report, inventory detail report in Amazon to track where your inventory is ending up, although most of the time, unfortunately, Amazon do like to split up even very small shipments into many states. And finally, on that, we can support. So, if there are any questions around what you should be doing as a business that wants to set up in the US or has just set up and is unsure about the tax laws, then you can come and talk to us, and we can help, understand the implications of what you're doing and what you're trying to achieve, and talk about some of these, statewide or countrywide programs that you might be able to benefit from to help reduce the burden of the financial cost of compliance.
I think that's a really important point you make about how Amazon run their business, that even very small quantities are likely to be split between multiple fulfillment centers, because their aim has been, traditionally in the US, it's been a 2-day delivery promise, but they're trying to get down to a 1-day delivery promise. And with a country that's sort of 3,000 miles across, it means inevitably they're going to want product on the West Coast, on the East Coast, and at several points in the middle. So even if you've only got 10 units, the chances are those 10 units are going to be split between multiple warehouses. So this is something that retailers have got to expect to happen.
Yeah, exactly. Yeah. And there's an additional consideration, once you have scaled, any of the states that you have not triggered physical Nexus in, on my next slide here, I'm going to talk to you about economic Nexus. So, in addition to those 38 states, that means that there are some states where there are no FBA warehouses. So what do you do about that? Well, physical Nexus isn't the only consideration. All states also have an economic Nexus threshold. So back in 2018, what happened was the state of South Dakota had been trying to enforce some sales taxes on Wayfair, who's an online retailer that everybody here probably knows quite well, but unsuccessfully. And the Supreme Court finally overturned the historical ruling that Wayfair was relying on to not be imposed taxes as an out-of-state seller. So what that meant is, moving forwards, this term of economic nexus appeared, and we call this the Wayfair ruling. And it means that a state can tax out-of-state sellers. So even if you don't have goods in a warehouse, you might exceed the thresholds that are determined in these additional states and still go ahead and register. So those additional states, after those 38 states, those additional 9 states, they have got rules in place which say that if you sell over 200 orders or $100,000 of revenue, then you need to register. And they include exempt or sales through marketplaces in that threshold. So what that means is that obviously you can be, you can sell over 200 orders through Amazon into one of those additional states, and you need to go ahead and register. On that, when you think about tax obligations in the US, just really quickly on what might happen. So firstly, the states don't need to notify sellers. They don't. So a seller might indeed have triggered Nexus in all of these states, and they might not know about it at all. And this does happen quite a lot. the penalties, can be very severe. They can range from, having to deal with an audit, which is time consuming and it's a distraction from your main business. There might be penalties on sales. Now, obviously, if the marketplace is remitting all the sales through their platform, the good news is that you don't actually have to pay any of those taxes yourselves, because the marketplace is already doing that, which means that the actual penalties that would apply to any sales made in those states probably wouldn't be levied against the seller, because the seller is not actually declaring any taxable revenue anyway, even if they were registered. So it's mostly going to be administrative fines that they can levy. One of the worst case scenarios would be if you have been selling on Amazon for a very long time, a state might ask you to go through a series of administrative tasks and back filings to bring yourself up to speed. That can be a process in itself, which can cost tens of thousands of dollars in accounting and legal costs alone. And just to talk about the Marketplace Facilitator Act, just to square this off in terms of the laws that apply, and then I'll stop talking about the legal aspect, I promise. So at the same time as Wayfair and these rulings on out-of-state sellers being taxable and having tax obligations as well, the marketplace, what we call the Marketplace Facilitator Act, it's got different names in all states because, as we looked at earlier, every state has got a different jurisdictional set that applies. States started also implementing these rules, which mean that, as I mentioned a minute ago, the marketplace has got the responsibility to collect and remit all taxes on behalf of their sellers, regardless of whether or not the seller has Nexus. Okay, so all of a sudden that means that at the marketplace level, and therefore if you think about it, Amazon has got Nexus in all states. Therefore, because they either have an office or a warehouse, or of course they've sold over $100,000 in every state. So they have to collect taxes and remit taxes. So if you're an Amazon seller, you'll often see that there are these additional charges that Amazon are charging. They're not passing any taxes back to you, but these are sales taxes. So they're collecting those at time of checkout. You're not seeing that cash, obviously. Amazon's just taking it and redirecting it straight back to the relevant authority. I've got some additional figures on slides.
Quick question on that. If Amazon are collecting and remitting the sales tax for me, and if I only sell on Amazon through FBA, so do I still need to register for these taxes? Do I still have responsibilities? Or can I just ignore it, just carry on selling and let Amazon deal with it?
That would be your risk. Everything we've been talking about in terms of Nexus still applies. The exception being 3 states. Alabama, Missouri, and Michigan. Missouri has actually not yet passed marketplace facilitator laws. So bear in mind that if you're selling on Amazon, that's one state for sure where you're going to have to be compliant. So you'll have to register and you'll have to recalculate any taxes that would be due on those Missouri sales and file them to the authority. Alabama's a really weird one, and these sort of let's say weird exceptions are unfortunately the rule in the United States. You've got to treat every single state as unique. Alabama, even though they state that if you're only selling on a marketplace, you don't have to register if you have physical Nexus in that state. They require you to get an exemption certificate from Amazon. So that means that they require you to get a legal document that stipulates that you are making sales to Amazon, who is effectively acting as a marketplace reseller of your goods. If you don't have that certificate, then you are non-compliant.
So it's quite complicated. And what if I'm selling through Amazon FBA, but also use FBA to fulfill orders on other platforms like maybe eBay or my own website if I've got a Shopify or Ecommerce store or whatever, or indeed on other marketplaces?
Yeah, so bearing in mind that on other marketplaces, the same marketplace facilitator laws will apply. So they will be still collecting and remitting any taxes on the sales made through their platform. So in terms of risk, the risk is still there for you to register in the States and file returns. Now, just to be clear on how that would work, you would be filing $0 returns. A lot of states have a dedicated return for this. So it's a single return per annum that you file, but you have to, upon your registration to that state, specify the reason why you're registering, what channels you'll be selling on, and then once you've clarified that it's going to be through a marketplace, they will then be able to provide you with that specific annual filing return. If you're selling through additional channels, that's where it gets unfortunately really complicated in the terms of who's collecting what, because your obligation is then to calculate taxes from the very first order that you'll be making in those additional channels. And then you have to report all of those taxes. So, for example, you might have been selling on Amazon for 5 years, should have been registered. You might be filing, $0 returns, those $0 annual returns in some of those states. But it does mean that you need to watch out, because you have to have a tax calculation that will apply to the very first sale that you make in any of those states on that additional channel. So you mentioned Shopify there, which is a very good example. Then, of course, you're going to have to make sure that all of that information is filed to the authority. So what a tax return will look like is it'll break out. The state of New York, for example, will ask you, what are your total sales? What are your exempt sales? What are your non-exempt sales or taxable sales? And how much have you calculated for those taxable sales? And how much you can actually file to me, basically. So you need to make sure that you are reporting all of your sales through that platform. Same thing will apply to B2B channels, or if you're selling to wholesalers or to franchisers or any of the brick and mortar stores. If you're working with Macy's or Sears or something like that, you'll have to make sure that you include all that information in your sales tax report.
So tax returns, no one's favourite thing, but is there anything else I need to be aware of before we go into how you can actually help me do these tax returns?
Yeah, absolutely. So just to cover this off really, and give a succinct overview. So we break this down into five major steps. So the first one being research and basically understand what your tax and duty requirements are. I say duty because obviously, if you are shipping goods, from Europe, maybe from one of those additional channels, duties might apply. Although one of the great things about selling into the US, for everybody here on this side of the pond, is that the de minimis threshold is $800, which means that any shipments under $800 wouldn't have any duties that apply to them. So it's quite a positive thing. This would mostly apply if you're working on other channels and not on marketplaces. But yeah, the first step being understand your tax obligations and find out where you have Nexus. If you need additional registrations in state registrations after that initial assessment that you've done, then go and register within those states. And then the point 3 is to integrate into the automation systems that you'll be using for calculation. And I say extraction here as well, because on a platform like Ecommerce or Shopify or something like that, then you'll probably rely on the tax engine to calculate the taxes. However, if you're working on a marketplace, then you don't need to calculate taxes. You just need to be able to extract the data. So we've got 2 different models of working on our side. And as you can imagine, these steps are actually quite broad across the spectrum in the United States. Because of the complexity in taxes, automating taxes is by far the most popular way of doing it. And step 4 is going to be to understand and then manage any exemptions. So we talked about that exemption certificate that Alabama has specifically for marketplace sellers. So you need to make sure that you have the correct exemption certificates. For any of those exempt sales. So what that is if you're selling to a wholesaler or reseller, or if you're selling to a marketplace, like in that case of Alabama, you technically have to charge taxes unless you have an exemption certificate, which is a legal document which has got the seller's signature and the buyer's signature on it, and that will enable the transaction to be zero rated, because we talked earlier about how sales tax only applies to that last transaction. So the assumption is that that sale is not going to be the last transaction, basically. But you need to make sure they're valid. You need to make sure they're in date. You need to make sure that the signature doesn't say Mickey Mouse, and you need to make sure that it's the correct certificate. So once you've understood your obligations and you've researched it, you're registered in all the right authorities, and you've got your tax engine up and running to calculate taxes or pull any of the tax data from your systems, and you've made sure that all of your exemptions are in play, then the last step is going to be to file and remit those taxes. So filing the correct tax return form to the authorities, and paying them the amount of taxes that they are owed.
And is it anything at all like in the UK, where it's just one simple tax return with about 9 boxes on it? Or is it literally a tax return for every state, or do you have to do a tax return for every city authority that collects taxes? How complicated is it?
Yeah, so more towards the latter, very complicated. Most of these tax returns can often have up to 20 pages. So they will request that you, provide a very granular breakout of the taxes then, because they might be administered and governed at the state level, but they will still all have those local jurisdictions. We looked at that map earlier. Now, all those local jurisdictions need to be paid the correct amounts. So when you're filing your tax return in California, the CDTFA 401A, which is the tax return for sellers, for sales use tax, that's you've got about 15 pages of different jurisdictions that you need to fill out. So you need to put all of the amounts that have been sold in each of those local jurisdictions into that. Those are generally state level, county level, city level, and then there are always special jurisdictions as well that need to be taken into account.
And it might sound silly, but where do I get a list of these jurisdictions, or do I just not want a list and the only way of doing it is through automation?
You can go to the state's portal. So it's the State Department of Revenue that governs sales taxes. So also quite a different thing. There's the Secretary of State over in the US. So in a single state, the Secretary of State will handle all things like corporate tax, income tax, payroll, etc. And then the Department of Revenue, completely separate entity, will be handling sales taxes and use taxes. And
sales tax and use tax, can you just touch on that? I've heard of use tax before. It sounds like when you use a product, but what's the connection between a sales tax and a use tax? What's the difference between the two?
Yeah, so we talked earlier about how sales tax is something that applies to the final transaction. But what happens if you don't have Nexus? What happens if you're buying something from somebody that it hasn't taxed you correctly? Well, actually, it becomes the buyer's responsibility to then self-declare those taxes, and that's what we call use tax. Use tax would apply, like I said, if you don't have Nexus in a state and you're selling something, then actually the legal notice and reporting requirement is for you to put in bold, in the language stipulated by the state, we do not have Nexus in this jurisdiction, therefore it is your obligation as the buyer to self-declare and remit taxes on this purchase, or something to that effect. And then what that buyer would do is go and fill in their tax return and declare that purchase to the authority.
And I've got to ask the question, do they?
I don't think so. I'll be perfectly honest.
Which is probably why they're so keen on collecting the sales tax rather than depending on the consumer to declare a use tax.
Yeah, so businesses will do it. So B2B transactions, generally they will always file their use taxes and they'll file them properly. However, consumers, there's such thing as this sort of shopping tourism in the US, and New York's got a really interesting rule whereby they don't tax any articles of clothing up to $110 at the state level. So you can imagine that a lot of people go and travel into the state of New York to go and do their shopping and go and buy some clothes. I somehow very much doubt that they go back home and then collect their receipts and file those in their tax reports. Yeah, but they should.
Yeah, so it's a very, very complicated then. So how do we go about kind of automating this and making it as painless as possible?
Sure. So I have a slide for this, of course. On the first step being research requirements. Now, of course, based on everything that we've talked about so far, it can be really daunting, but there's no need for it to be. Firstly, we have got a variety of different types of sales tax risk assessments that we can do. We have a free economic Nexus assessment that you can go onto Avalara's website, plug in your sales data by state, and we'll tell you if you've triggered the economic Nexus thresholds. So if there's anything a little bit more comprehensive that needs to be done, then we can also support. And of course, if anything, if any historical exposure has been identified as part of that, we can then go and help remediate. So again, there are state systems whereby you can request a penalty abatement if you've done a self-audit. Penalties in the US can range up to 50% of the taxable amount. So there are some states, and they're not the smaller states, unfortunately, where if found to be in an irregular situation, they can request that you pay up to 50% of the value. So if you owe $1,000 in taxes, you might have to pay $1,500 as a total bill, in addition to interest on that amount, depending on how long it's been since you should have collected that. But we can use state programs to get those penalties abated, and we can use any tips, any of the tricks that are available to Americans. We also provide to our customers to help them reduce that total liability. But let's not talk too much about historical compliance. We normally hope that there's none, and it's very straightforward to go forwards with. But we do have we're very different compared to a lot of other software companies, and the strange thing about us is that we have got a massive tax services arm. So we have qualified CPAs and tax attorneys, as they call them over there, tax advisors, who can provide any variety of services to help you understand your tax obligations and make sure that you are selling in the correct way to avoid being on the wrong side of the law. So the rest of the steps are going to be to register, and I haven't got a slide for that because it's quite straightforward. We have got a registrations portal which you can register in any of the states all in one go on, so we make it really easy. But the steps 3, 4, and 5, this is where we would use software to automate. So that complicated part of calculating taxes if they need to be calculated based on that very colourful map we looked at. Managing any of those exemption certificates, how do I know which exemption certificate I need to collect? How do I know that they're valid? How do I know that they're in date? How do I know that I've got exemption certificates for the correct customers? And of course, remitting those taxes to the authorities is all automated. So once it's integrated and once it's set up, which is also very easy to do, we've designed it, for anybody to be able to log into our platform, Avalara and Avatax, and go ahead and do the setups themselves. Then it sits behind the scenes, and you can see here that we'll integrate with Amazon. If you have Shopify or WooCommerce or any additional channels that you'd like to integrate, we can integrate with those as well, and those will be the central point of integration for us to extract or calculate any tax. Then we use that information to file the returns, which you see on the right hand side there, automatically to the government. So really, once it's all set up and running, the good news is there's only really 2 things that I ever say anybody has to do within our system. The first one being to look at our Nexus monitoring map. That's right, in Avatax, there's literally a map of the United States, and there's reporting and alerts available which will tell you if you have breached one of those economic Nexus thresholds in a state where you're not registered. So that's the first thing that you might do. And the second thing that you might do is double check the returns that we are about to file. So obviously, if we're filing returns and if we're withdrawing money from your bank account to go and pay the authorities, I would personally prefer to just double check those amounts every month. That being said, you know, a lot of customers don't, because we're bound by a bunch of guarantees with our customers, which means that we have to file on time. So even if you don't do those 2 steps, we will still make sure you're compliant. So we'll make sure that your calculations and that your rates and that your data is accurate, and we will make sure that your returns are filed on time. If there's an early prepayment bonus available for a state authority, if you're filing early, then we will also make sure we do that so that you can take advantage of any of those bonuses.
Yeah, prepayment bonus sounds great. So I've got to ask, obviously this is quite a complex service, but it sounds like you make it very, very easy for me with literally just a couple of things to check. Keep an eye on my Nexus status and keep an eye on the money that's about to come out of my bank account. So what is the kind of cost for this service to have it all automated and done for me? And is it based on a flat fee, or is it based on turnover, or is it based on the amount of tax I've got to pay? How can I budget for the Avalara's service?
Sure. So we've got a very fair model, which depends on volume of usage, basically. So depending on how many tax calculations need, or how many returns need filing, or how many registrations need filing, you'll fall into a certain tier of service with Avalara's solutions, which means that you know, if you're very small, just starting up, you know, it'll be a very minimal cost of business. We have solutions designed so that you can get set up and running. You don't need to register anywhere. You might want to use the system just to track your economic nexus, for example. So lots of people who set everything up to track the nexus, which means that when they do trigger any nexus anywhere, be that physical or economic, they'll be able to just switch on a new state. So there won't be any like gaps in compliance. And then, of course, if you're on the wider range of the scale, if you, you know, do have various channels, and you know, you're selling, you know, tens of millions, hundreds of millions into the US, then our pricing is regressive. So, of course, it costs a lot less to, you know, purchase, you know, very large bundled solutions with us for each solution, because understanding being you're going to need something quite complicated, but we don't want that to, you know, put anybody off. And again, we'll support in all of that.
So quite minimal if I'm starting out and I'm just selling a few hundred products a month in half a dozen states. It's not going to be prohibitive to start with.
It's so all of our pricing is actually bespoke, and my job is to determine the exact scope and which solutions at Avalara are going to be useful to customer, and the pricing is always almost invariably you know, something that's in line with what a customer can pay. Otherwise, we wouldn't be proposing it.
So that brings me to probably the most important question of the webinar, and I know you've got a little bit more information to tell us, but how do I get hold of you to get that custom pricing? You
know, I think we've covered most of it. I think on the final slide, I've got my name and a colleague's name who I work with a lot in this space. You know, so you can get in touch with us on those email addresses to you know, find out anything else about US tax laws. And you might have been able to tell we really like tax, so you know, we'll be able to support you and tell you what sort of solutions we have available.
Yeah, so thanks so much for this, Benjamin. I think it's a fascinating, amazingly complicated, and I have to say, tax is not one of those things that is top of most retailers' minds, and certainly not top of mine. The biggest concerns are getting the product in the right place and getting it sold and making a profit. And obviously, we all know there are taxes to pay, but keeping the taxation as simple as possible and hopefully push back in the background and the least of my worries is what I want to hear. And knowing that you can provide a service where literally just got to keep an eye on my Nexus status in different states to find out if I've triggered a threshold, and then keeping an eye on my returns and making sure I've got enough money in my bank before you take it out. And it sounds like a pretty good deal. So before we finish, I mean, we've talked a lot about taxation, and for a lot of people, the tax side is going to sound like a barrier. But tell us about the positive sides of selling in the US again, the opportunity, and tell me why it's worth jumping through all these tax hoops to sell in the US.
Yeah, sure. I mean, you know, it is. It's a massive market of takers, and they really like, you know, to purchase, you know, any new product. So what I mean by that is, you know, there's massive early adopters. So we see this a lot when. You know, when e-bikes launched, you know, and became really, really popular. I can't tell you the number of e-bikes companies that they got in touch with us to start selling into the US, you know, and these are, you know, a lot of them are startups, you know, and it's often the very first market that a company will look at, you know, because you can just access this massive, you know, this massive consumer market, and it's a, like I say, it's, you know, it's a high consumption market, you know. And you know, just to be clear again, you know, Americans face all these complexities with taxes as well. It doesn't stop, you know, it doesn't stop one-man bands from operating, you know, or anything like that. You know, automation is the way we can basically take all this really complex stuff about, which sometimes I get really worried about, you know, talking about all these tax legislation, all these laws, because yes, it sounds really complicated, but that's exactly why companies like Avalara exist, is to completely remove all of that. So, you know, really, you shouldn't be worrying, and you shouldn't have to you know, complicate any things for your business. You focus on you know, getting your product to market, you know, testing it out there, finding out what works, and selling more of it via the channels that work best, and we will just deal with the, you know, logistical tax side behind the scenes for you.
So that sounds perfect. I get to do all the fun part about product research and product marketing and testing the appetite for the product and getting the sales in. And I can leave Avalara in the background to deal with the complicated tax side, which I know you've said that you find it fascinating, Vedran, but I have to be honest, most people find it really, really tedious and boring and would much rather someone else dealt with it for them. So can we just put that slide back up with your contact details for anyone that wants to grab them? We've got your colleague Nicola Morton or Benjamin Faust at avalara.com. So make a note of those emails, and obviously we'll be making this webinar available to rewatch as well if you don't manage to write them down now. But back to you, Ben. I just want to thank you so much for your time today and for all of the expertise and for making something very, very complicated, relatively simple and understandable. And once again, I can't get over the fact that if I'm using Avalara, I've just got those 2 reports to monitor, the places I've triggered a Nexus in that I need to file returns, and keeping a look at my bank account statement to find out how much tax I owe that's going to be going out, and just having a sanity check to make sure it looks right. So thank you so much for your time. Any final comments, Benjamin?
No, that's it. It's been an absolute pleasure, Chris. You've been a great host. Thank you.
Brilliant. Thanks so much. Goodbye.